Ladies and gentlemen, it is my pleasure to introduce Patrick Pouyanné as our final keynote speaker of the day. It seemed fitting to once again have Patrick bookend our gas discussion, given that his tenure as Total's CEO has seen the company pivot increasingly toward gas, and LNG in particular, while also looking toward electricity as a second pillar of growth into the low-carbon energy future. Patrick joins us today to outline Total's perspective and role in that energy transition. And with that, I will hand off the podium to Patrick.
Hello, good afternoon, everybody. It's a real pleasure to be here again, one more year, maybe for the last Oil and Money conference, because I think there is a debate about the name of the conference, which gives me, by the way, the idea of my speech today. Because we always say we are in a very exciting times, that energy market change, and I think it's true. If I try to summarize what is my feeling after 1 year after I make that speech last year here in this room, I think really I've observed that the pressure on oil and gas companies is increasingly growing and growing at a pace that, frankly, I would never have anticipated 1 year ago. I think this is a reality. Of course, the expectations of the people are not so much changing all over the world. They want us to continue to deliver a cheap and reliable energy. That's clear. But in fact, in particular, in our countries here, in developed countries, but everywhere as well, we see them asking for us bringing solutions to tackle the climate change. A lot of observers would like us to become dinosaurs. Maybe because I'm a tall guy, but I can tell you that we will not become dinosaurs. Why? Because I think, contrary to dinosaurs, we are human people, we can think, and we can observe what is happening around us. We can have a clear view of the challenges and of the solutions. But if we don't want to become dinosaurs, we'll have to adapt ourselves. Otherwise, like dinosaurs, we could disappear. And I'm optimistic because I think we have all the chance, all oil and gas companies, to be winners of this energy transition. We know the energy world, we know the markets, we know the technology, we have the financial capacities, and we have also people. I will come back on it. But first, I would like to share with you in this debate what is the vision that we have for the energy world in the 2040-2050. A lot of observers want to take all the fossil fuels and say, all that, we don't need that anymore. This is not a pragmatic approach. This is not the reality of the world in 20 years. Because in 20 years, the people will still ask for having a cheap and reliable energy, and also, of course, an energy system which has tackled the climate change challenge. And the vision that we have in Total is that, of course, electricity will be much more important in 20 and 30 years than today. This economy is being more and more electrified for very good reasons, and electricity could represent as much as 40% of the energy demand. But electricity will have to go hand in hand with another or two energies, and one of them being for us natural gas. I will come back at it, because natural gas will ensure the seasonality of the demand, we ensure the intermittency of the demand with electricity, and it should go as well, this energy system, with more energy storage, which have to be developed, technologies which have to be developed, and of course, as natural gas is an hydrocarbon and emits CO2, with some carbon neutrality solutions. This is a vision we have, and this is why we are putting in place a strategy which has as an objective to adapt ourselves through this new energy world. I did not pronounce the word oil. It does not mean that there will be no oil. But there is a big debate about oil. And the vision we have on oil is that we share the vision that there will be somewhere between today and 2040, 2050, a demand plateauing and even maybe declining, which means that we will continue to produce oil, but we will produce the, I would say, efficient oil, low-cost oil, the good oil of the Middle East, I would say. The good oil which will be able to feed the needs of the world populations. But let's speak about the other energies, and first, natural gas. I know that you spent a day on natural gas. I will repeat what probably many speakers have said, but we need to repeat it and to repeat it because obviously it's a different fossil fuel than the others. It is very abundant, there is huge reserve, it is flexible in terms that a gas power plant has the ability to start with 1 hour and to increase its output within few minutes to manage intermittencies of renewables, or again, to manage the seasonality of the demand. It's clean in terms of particles, there is very small pollutions. A recent study of the Imperial College has demonstrated that the full life cycle of natural gas is really interesting from a CO2 emission life cycle. There is a but. The but is the methane emissions, and we all know that we have to tackle this issue. As a company in Total, in the upstream operations, we are really at a very low level of methane emission, but it's not only a matter for the oil and gas companies, it's a matter also to work with our customers along the chain in order to avoid any methane along the transportation, the transmission lines, the distribution networks. So natural gas has a brilliant future. Another condition will be that we continue to drive down the costs, and in particular on the LNG value chain. As you know, Total, we've made a big bet on LNG. We'll double our LNG production between today and 2025. It will represent the equivalent at 800,000 barrels per day equivalent in our production, a quarter of the global production. We are becoming number 2 of the world LNG, with strong positions in all the key areas, Russia, where we can make money, around $1 billion of cash flows for Total. The US, where we will become the number 1 US exporter by 2020 of American gas. And also, of course, the Middle East, and last but not least, Mozambique, as we all know that we just joined this new adventure in this country very recently. So natural gas is really different from the other fossil fuel and will be clearly part of this energy mix of the future, and we must continue to work hard to explain why and how we can make it cheaper, which is important, because again, this is what our customers request, and also cleaner, which is where it's important to tackle the methane issue. Electricity, then. I spoke about electricity. There is clearly a huge growth. I think it's a fact, and if we want to adapt ourselves, we have to join this world of electricity. First, natural gas is leading us naturally to become electricity producer from natural gas. It's not so complex to do that. But more than that, we think that there is room to create a new player in Europe, thanks to the liberalization of the market, which give access to new players, access to the transmission networks without having to invest. And so we are on the strategy to create a new player which will produce electricity, either from natural gas or from renewables, which will trade electricity, market it, aggregate electricity, and which will market it, distribute it to customers. We have already 4 million customers, and we want to have 8 million by 2025. We'll have, by 2025, our target is to produce to have 10 gigawatts of capacities of electricity in Europe, 3 from natural gas, 7 from renewables, and also 8 million customers. And outside Europe, where there is a big growth for electricity demand, we want to continue to develop and to become a large renewable electricity producer by having 25 gigawatts of gross capacities being installed by Total. People always ask me, but all that is not profitable. This is not true. I can tell you it's not true. We can make profits with electricity. And I don't know, by the way, because it's a world which is moving very quickly, why new players like oil and gas company could not be as smart as others. The way to do it is to, of course, combine some investments. You have to invest. It's CapEx intensive. to make 25 gigawatts by 2025, we need to invest $4 billion per year of gross investments. But then you need also to use this world, which is a strange world with very low interest rates. So you make leverage on your equity. Then you farm down 50% to financial institutions who dream to have this type of assets in their portfolio. And at the end, you have a double-digit return with a capital-light business model, which will allow us to become a large player in this field. I spoke also about electricity storage, energy storage, I should say. This is fundamental because, of course, these technologies will be developed either through batteries or from hydrogen. Hydrogen is an interesting storage carrier for the future. I will not develop it longer, but clearly we need to work on this solution. And by the way, there is a synergy between hydrogen and natural gas, which are the gas pipelines, because if you want to store energy in hydrogen, you need to find a way to vehicle it, and the gas pipelines are good vehicles. I spoke also about carbon neutrality solutions. It is clear that we are convinced by in 2040, 2050, there will be a carbon price in this world. There will be a carbon price. And so if you think to that, you have new businesses which will be developed. When we speak about CCUS, obviously, with a carbon price, we can make profit out of it. When you speak about nature-based solution, investing in the nature and natural carbon sinks, it will make a profit with these solutions. So we need to think to this world, a world changing, a world where the energy markets are changing, but also a world where you have a carbon pricing. And so let's invest today in this solution at early stage in order to be ready to benefit from this new world. Another trend in which we will have to tackle is digital. Digitalization is not only for tech companies, it's also true for us. It's a source of being more efficient in our companies, more efficient on oil and gas, more availability of our plants, lowering the costs, enhancing some revenues, but it's also at the core of the electricity business. You know, if you want to aggregate different decentralized sources of production, digital will help you. It's at the core of many of the new energy world. And so this is also important to invest in digital talents. And it's why Total will create very soon, next year, a digital factory with 300 digital engineers in order to develop effective business solutions in all these energy fields. And you know why the dinosaur, what is the main risk that we become dinosaur? The main risk for all companies is the capacity or not to attract talents. In all the debate today, the only fear I have is how do we continue to attract talent. So I was happy to see our 8 new leaders and happy to sponsor them. And ask them, by the way, when I met them, why do you join oil and gas company? You make a mistake, you know. They told me no, because you are here. But I think that's really the war of the talents. And if we introduce clearly in our strategy this renewables part and this electricity part, if I speak today about digital factories and digital technologies, it's because clearly it is a way also to attract talents. And I'm sure that attracting talents is fundamental for us. To be honest, most of the engineers who join Total, they want to work today for renewables. When we have managed to convince them to work for us, they then discover other businesses of Total, and they discover that it's not too bad to work in Mozambique to create a new LNG plant. So attracting talents is really the challenge for the industry. This is why we need to be pro-aggressive, to be proactive, and to be part of the solution. So a famous sentence says, we must change everything so that nothing changes. And world prosperity can continue to improve. I'm sure that Total will remain your most favored energy company in 20 years. Thank you.
Thank you very much. Just a couple follow-up questions on that. We'll open it up to the floor as well. But you flagged the intensity of the pressure on the industry and how it's grown so much over the past year. But there's also so much uncertainty around how the energy transition is going to evolve, its pace, the degree of disruption. How do you convince investors and society at large that they should have confidence in your plan and your ability to adapt when you cannot know exactly how things are going to evolve?
I mean, let's be clear. The reality of the planet, maybe I will shock people, is that we are not at all, globally, not only ourselves, on the 2-degree scenario. The reality of the planet is that last year, like the year before, the investments in coal continue to increase. They increase year after year. The reality of the planet is that we continue to deforest in net, there is a net deforestation on this planet. So then, in the streets, you have young people calling for actions. You have political leaders under the United Nations making nice pitches, but the reality of the planet is not there. And we are, I would say, in the real world as a company. We know that our mission is to deliver energy. And that if we stop producing oil and gas like some people would like us to do tomorrow, there will be a panic, and we'll be accused, by the way, to have organized a scarcity and that we do our interest. So I think this is the debate. But there is a short-term debate where obviously the short-term is that we have to be pragmatic, and that even if we have some pressure, they want us to deliver this energy. And at the same time, I think, this is why I'm making that speech, we need to show the direction. When we decided, well, I didn't mention it, we invest 10% of our capex, 1.5 to 2 billion, in low-carbon electricity. By far, we have the largest investments among the majors in this field. So some people could tell me it's too much, you should stay oil and gas, and the others, obviously, majority will say it's nothing, 10%. You should do immediately 50%. And as I said, I tell you, our investors, it's not so complex. Our investors are pragmatic. They are also under pressure themselves from their customers in order to demonstrate that that portfolio is somewhere, I would say, taking into account the climate change challenge. And so when we bring some solutions, providing we are pragmatic, we can convince them. Of course, people would like us to hurry up, but you know the reality. And the financial world is saying it more and more loudly, I would say, is that today we are not limited by the level, by our amount of money in these new energies. We are limited by the number of projects, because it's not so easy to make. And you want to develop an offshore wind farm or a solar farm, you need to tackle many issues: administration, legal, communities. It's not like that, you have to work. And so we are comfortable. I think the level of investments we are doing today is already high. We want to demonstrate that we can do it, as I said, in a double-digit capital-light business model, which is a way to make it profitable, because there is nothing sustainable, it's not profitable. But we have also, as an oil and gas company, to show to our investors that we are not a zero, what is only, we are not a zero value, we have a future. Our dividends are sustainable, fundamentally. And so I think by growing this segment, step after step, in a profitable way, this is the answer. So, of course, there is pressure from the society, political leaders. I think the young people do not make a mistake. They say that they may speak a lot, but not acting. And the first thing to be done in this world, if we are reasonable, would be, again, to stop growing the investment in coal and to stop deforesting the world. Having said that, we are to speak up, because otherwise we are taken as, because we are large corporations, we are wealthy. People see us as, okay, it's fossil fuel, everything should disappear, which obviously is absolutely not realistic. So the pace will be probably, in fact, the pace, I will tell you, it will be dictated as well by the society. And the consumers have their word to say, because the consumers, as I said, yes, one part of their brain, they want to have a clean energy, but the other part of the brain, they don't want to pay for it, or no more paying. And that's a real difficulty, because there is no way to make such a huge energy transition without huge investments. Right. We all know that. So let's find the pace, but that's true that the pressure is accelerating. And so our positioning is not so easy in this debate, and it's why we need also to focus and to be and to demonstrate that we have a form of real willingness to work. And I'm not doing that. We are not doing that in Total because of pressure. We do that because we think that clearly our energy markets are changing, are moving, and we need to adapt ourselves to these new these new markets.
Mm-hmm. Well, I mean, along those lines, one of the things that really stuck out from the conversation today is the number of times it came up of the onus on the LNG industry to become greener, to lower the emissions profile of projects and things of that sort, because there's kind of a line of sight that eventually buyers will want to know the footprint of the gas they buy, and it helps make that case. Is that something that Total is looking at as it builds its portfolio, and do you think the industry at large recognizes this?
I think it's very important. I can tell you, Arnaud Boyac is here, and 1 year ago already, I told to my colleagues, yes, we are really, strategically, I think it's perfectly good to go to LNG, but we need to tackle with the LNG cycle, CO2 cycle emission. And we are working on it on the whole chain. And it's not only a matter, let's be clear, of the plant itself, the upstream part, where we can make progress by, for example, trying to electrify part of the process. We will develop a small-scale plant in Oman, where we want to develop it based on a pure electrification process with 1 million tons, so it's not big. An electrified process, linked, of course, to a solar farm, which is the most complex part to organize, by the way, in Oman. Sometimes you have surprise, but that's life. But this is possible. And then there is another part of the chain on which you can make huge progress. It's all the shipping part. The shipping part today is the technologies of the vessel can be optimized. So the trip of the vessel can be optimized, because today, you know, this LNG industry is not organized as an optimal way to ships. So it has a cost, but it's more a point-to-point industry, like pipelines. So all these vessels are clearly, the number of vessels, I think we have, the global fleet is oversized by 30 or 40% compared to if we were an optimized commodity world like in the oil world. So this is clearly a big piece of where we can drive down the emissions. So yes, it is a must if we want to, because we will have to demonstrate that it is the case. And recently, by the way, when we explained our strategy in the LNG business, Arnaud has done that. There was clearly a full presentation of the way to continue to drive down the CO2 emission of the LNG chain. And there are plenty of ideas. It's just, again, that the industry has to take that as a must, you know. What we have decided in Total, very symbolically, you know, in all our plants, when you go in the plant, you have the safety at work statistics for every employee. No, in each plant, every plant of Total, you will have the safety statistic and the CO2 emission of the plant, so that everybody is aware. And I think awareness, being conscious of responsibility, will find solutions, and our engineers will be good at it.
Mm-hmm. Well, we only have a few more minutes, and I want to make sure we can get hopefully 2 questions in. So could we bring the mic over?
You have 8 minutes.
Yes.
That's why I was brief to give you the floor, you know.
Arabian project developers. With reference to renewables, particularly solar, how do IOCs deal with their Asian competitors with particular reference to manufacturing? And the second part of my question, how challenging is dealing with renewable legislation and tariffing in the Middle Eastern market?
I didn't capture the first one. Let's be clear, in renewables, what we want, the strategy is not to manufacture cells, even if we've done that in the past. That was not the best idea we had, but you know, when you diversify, you can make mistakes. Clearly, what we want is to produce electricity. To produce electricity in solar, you have 2 ways to do it, two big segments. One are, I would say, utility-scale solar farms, where obviously you need to take the lowest possible sales cost. So Chinese cells are very good. You have a lot of space, and then you develop it's a problem of space mainly, and then you develop your large-scale solar plants. You can make some optimization, but having double-face panels, etc., but it's shared within the industry. So it's not something where The technology is not so complex, in fact, and it's very shared. So it's more a question of being able to first to do it at a large scale in order to de-risk the project, and then and then there is another segment which is quite interesting as well, which is where the technology has more value, which is the distributed generation, where you put your solar cells or solar modules on the roof or on limited space, where obviously you can have a value for the high-tech cells. This is more interesting. The market is 2/3 on the first one, 1/3 on the second one. And there is a trend there where you can also, so there is more technology, and where it's more a B2B business, where, for example, a lot of corporations today, they want to solarize their electricity or to make it carbon neutral. But this is a business where we are entering, where we are developing. We have already developed some business. And for example, in this one, we just made a joint venture with a Chinese company to address the Chinese market. In the Middle East, to be honest, like always in the Middle East, people are very smart. They were very smart to obtain the lowest margin on oil. Historically, we all know that, in Abu Dhabi, in Iraq, and etc. And it's the same with the sun. The sun does not belong to them, and so they make huge competition, and you see people competing. So there is a limit to what you can accept. But let's be clear, for Total, and we have not been successful. I hope we'll be soon in 1 or 2 countries. We are looking to 3 big tenders. The big advantage that they can offer, it's a very large scale. So there is a scale effect. If you make it at a very large scale, I mean, you make a solar farm of 1 gigawatt, because in the desert, normally you should be able to have a lot of space. You can be more efficient and lower your costs by making it large scale. So the message I would say to the Middle East countries is, yes, make tenders, but make them big, so that we can really, and 400 megawatt plant for Saudi Arabia is nothing. I will tell you, it's small, it's 400 megawatt. 400 megawatt is just less than 5,000 barrels per day. So it's compared to oil, it's very small. So I think Saudi Arabia should offer tender with gigawatts, and then you will see the price coming down.
But do we not depend on government legislation and tariffing in order for solar to be profitable?
It depends. Again, it depends on countries, but you can make it without subsidies in many countries.
Tahir Majidi, Ernst & Young Energy in the Middle East, North Africa. Given the electrification of vehicles, how does that fit within your retail fueling strategy? Be interested to see how you think about that.
Obviously what I have described for globally the company is true for all the segments. And our marketing, our retail marketing, they are also developing a strategy on EV charging points. So we will be an EV charging points player. We have already 20,000 EV charging points in Europe. We target more than 100,000 in 5 years. So it's a different business. On the retail, obviously, it could put into question the future of the retail. But the retail, already in Europe, and I think I speak for Europe because the rest of our business is in Africa, where I'm not afraid by EVs in Africa, to be honest. Let's give them first electricity before to speak about EVs. But in Europe, already more than 40% of the cash flow of retail is not coming from gasoline. It's coming from other businesses. We sell not only gasoline in our retail networks. So it's an asset on which, obviously, the non-fuel business should continue to be developed. It's also, to be honest, for us, we don't own all of them. And what we own is generally located in cities where we have a real estate value. So for the next 15, 20 years, I'm not afraid. Total, by the way, if you look to the strategy we have followed in Europe, we have sold most of our retail business, except in 5 countries where we have large market share: France, Belgium, Netherlands, and Germany. Why? Because we think that it's not worth keeping this type of business for the long term. So we have already somewhere resized the business in Europe.
We have time for one more question, if there's one up here.
I'm Jordi Zio from the Leaders for Tomorrow, geologist in Harvard University. I used to be in Total too, as VIE in Houston. First, thank you for the opportunity today to be there. And then I'd like to ask you, the past few years, Total acquires different companies, as Maersk, some assets from Anadarko, but also we had some discoveries, as for example, with Ballymore 2 years ago. I would ask you, what should we and what could we wish for Total for the next? More acquisitions of more discoveries?
It doesn't work like that. You know, in fact, for the timing, what you should wish for Total is just executing all the projects we have put in the portfolio. We have been quite active, it's clear, to see some opportunities at a good price. The Maersk Oil company was acquired, and we have already, in 18 months, repaid half of it. So the payout will be quite quickly come. And on the Mozambique, I can demonstrate to all the people in the room that the price we paid was quite appealing, and we'll make a huge success of it. But having said that, with all this activity, and including some exploration success, you spoke about Gulf of Mexico, but recently we made 2 discoveries in Guyana and 1 in South Africa. We have a portfolio which, in fact, is large enough so that we don't have any worries about renewing resource. We have reserve. We have even a larger portfolio than expected. And so today we concentrate on developing this portfolio. We said to our investors 2 weeks ago that we have in our portfolio enough to produce 3.5 million barrels of oil per day by 2025. And I can tell you, behind this figure, nothing was notional. All the projects are in the portfolio. It's a matter now of being able to execute them properly and timely, which has been such vision of the future. I'm happy because then it gave us more time to continue on exploration. And we will continue to spend 1.2 billion per year in exploration. On the M&A, frankly, it depends on opportunity. I strongly believe that in this industry, you make money either because you can discover, I mean you innovate, you create, or because you will be counter-cyclical. You seize opportunities not in a bid round, like which will happen in a South American country very soon. Because then I can tell you, like in Iraq, you can destroy all the value you want between all the big companies. But if you can have a direct negotiation, because it's a way to innovate, you are a little smarter than your peers, and you are alone on the target, like we've done with the 2 examples, then you are in good conditions to create value for your investors. So both have a merit. But again, our priority today for us is not to grow for volume, is to be able to deliver the value that we have accumulated potentially in the company.
Well, with that, we need to wrap up everything. I will hand it back to Peter to close the conference, but please join me in thanking Patrick again for his time.